Monica Fan's here. She's with us. She's a currency strategist from State Street Global Advisors. Hi, Monica. Is a shift in the yuan, is the policy likely to change anytime soon, or is that lessening as the days progress?
I think many analysts, including ourselves, had anticipated some shift towards at least a crawling peg by the middle of this year. June's fast approaching, and I think the deterioration in the sovereign debt crisis has certainly lessened the urgency for that. And quite frankly, it's difficult to see in this current economic climate for that to be the priority of the US government.
And of course, China can look to Europe and look to the euro, which has been falling, so it maybe doesn't need to do so much, does it?
Exactly, and I do think there's obviously been a lot of talk that instead of actually shifting to a crawling peg against the US dollar, they would actually look to link to a trade-weighted basket. That said, Europe being this epicentre of the sovereign debt crisis doesn't make diversification into euros very attractive at the moment.
What about the European debt crisis and its potential impact on China? Let's put it in perspective, Monica. How big could it potentially be?
Given the fact that most of the countries at risk are those with very high levels of accumulated public debt and very high level of public deficit as a percentage of GDP, and official Chinese reserve holdings of European sector bonds tend to be lower than some of the other economies, they are perhaps in a far better position to weather this current storm than the United States and even the United Kingdom, and also, of course, Japan, all of those countries of which have been at risk of credit downgradings.
What else is going to come up today in this Sino-US strategic talks that take place, of course, once every year? It's almost been overshadowed by events in Korea, hasn't it?
I think it certainly has been overshadowed by tensions between North and South Korea, as well as concerns that the Eurozone sovereign debt crisis will continue to deteriorate. That said, I think there will still be more warm, friendly comments about shifts and considerations of a more freely flexible exchange rate mechanisms. That said, we do note that Timothy Geithner refrained from calling Chinese government a currency manipulator. If anything, there's probably more economic rationales for calling the Swiss National Bank a currency manipulator. So I still think that description will remain off the tables.
The euro's bounced off its lows of last week, 121.44. We're above 125. Where are we heading in the near term with regards to the euro, Monica?
I think in the very short term, over the next week or so, two-way risk in the euro-dollar has already been engineered very successfully by policymakers, although fundamentally the markets, I think the consensus is still very strong to be very bearish on the eurozone and the euro. These problems are not going to be resolved anytime soon, if in fact fiscal austerity measures are going to be only intensified over the next 2 to 3 years.
Very quickly, do you foresee any moment whereby the ECB could go in the market and buy euros?
Oh, I wouldn't rule that out at all. And the precipitous decline of the euro has certainly elicited very prompt and strong reactions from policymakers.
Monica, thank you.